John Petrides, portfolio manager, Tocqueville Asset Management. I haven't seen you in a while, John. It's good to see you. By the way, we've had a really volatile market. We haven't chatted. In case you didn't notice, there was 4 weeks of selling and everybody got nervous. And then they weren't. What are you telling them now?
Yeah, I mean, we had a very strong August, right? So it wasn't overly surprising to see a pullback in September, specifically with technology leading the way. But, we're 4 weeks from now, there's going to be a lot of answers to a lot of questions. And I would expect the markets to remain volatile. But, we have essentially, we will have an outcome to the stimulus package. It will be passed before the election. To me, I can't imagine Congress or the president wanting to go into the election without passing a stimulus package. We will have earnings starting next week. So we're going to see how strong companies' top line and bottom line growth has been. Remember, in the second quarter, 84% of companies in the S&P 500 beat Wall Street analyst expectations, and 65% of those companies beat on the top line on sales. So a very, very strong growth. The second thing, and then third, obviously, we're going to find out about the presidential election. And right now, with the polls shifting or presumably shifting in Biden's direction, and I'm more focused on what's going to happen in the Senate. Because if the Democrats sweep, then, President Biden's potential President Biden's tax plan of raising corporate taxes from 21% to 28% is likely. And clearly that's not going to be good for stocks.
It's interesting to see. I mean, I was going to ask you, what are you advising to folks at this point ahead of the election and the volatility that it's expected? At the same time, seeing a headline about home prices. Home prices up 14%, but price growth may wane soon. What are some of the trends that you're looking at, whether it's homes or tech funds or, when people are trying to invest? Right. And the election looming. How do we tiptoe through these next few months?
Yeah, to be honest, the short-term data point that I'm most focused on is hospital utilization rates. I mean, how many people that are getting infected are ending up in the ICU? And if hospitals aren't able to handle that capacity, then you're going to see governors statewide roll back their economies further. I mean, you're seeing it already happen in New York City today, where Mayor de Blasio is starting to roll back schools in Brooklyn and Queens. So I think that's a big deal. That's the data point that I'm looking at, because the faster that we could at least hold, or the better that we can hold the rise in COVID cases until the vaccine is approved and distributed, the longer we get to keep the economy open, and we can keep particularly the small businesses and those discretionary businesses, restaurants and where we spend the leisure dollar can stay open until we get back to some sense of normalcy. So that's what I'm focusing on. And right now, across the board, the hospital utilizations are okay. Some states are worse than others, but it's not like it was back in March and April, that's for sure.
Right. No, I understand what you're saying, and it makes sense. It makes sense to give us a good indication of where we stand. So you want to get to a name like Coca-Cola. There's nothing I love more than a nice Coke bottle when you take off the top, right, using the opener, and the bubbles come out. It really is a thrill. You love it because it's a great consumer name, maybe with some dividend. I don't know. You tell me.
Yeah, well, I think there's nothing overly sexy about Coke, that's for sure, from an investment standpoint. But the new management team that's come in, they're expanding beyond syrupy carbonated beverages. They're going into hard seltzers. They're expanding into coffee. They're going to be building out their energy drinks platform a bit further. And that's all sort of new top line growth platforms for Coke to build off of. The previous management team spent a lot of time, money, and resources on smoothing out their supply chain capabilities. Now the new management is going to take that distribution capacity and open up new channels to spread through it. And we think that is an underappreciated growth story for, what is typically a sleepy company like Coke. On the other side of the coin, when you look from a macro picture, with the amount of money printing the Fed is doing, investors can't find income anywhere. Bond yields are so low. The U.S. 30-year bond is trading at 1.4%. So on an after-tax, after-inflation basis, 1.4% over 30 years, you're basically locking in a negative rate of return. Here with Coke, you have a company that's committed to the dividend, and they grow the dividend every year, and the dividend is close to 3.5%, which is nice yield relative to the bond market. And there are two hidden variables, I guess, that I don't think the market appreciates within the stock. One is, if the U.S. dollar ever comes down and weakens, Coke gets more than half of its sales overseas. So they will clearly be a beneficiary from a weaker dollar. And then on the other hand, if volatility or when volatility picks up, Coke historically is a less volatile name than the overall market, despite the stock is down 15% off its recent highs. So, there's a lot of reasons, I think, to like a name like Coke in your portfolio. It's not overly flashy, but I think it gets the job done for investors.
And I like what you're saying about new management. I mean, they're being a little more entrepreneurial and just guiding the ship a little differently. I mean, I see here some alcoholic sparkling water drink, Topo Chico, hard seltzer, to be in the Coca-Cola lineup. So sometimes you have to change. You can't just stick with one thing, right? You have to adapt. At the same time, my favorite Zico coconut water will be gone. I'm not happy about that. But this is exciting stuff. John Petrides, always great to see you. Thank you so very much. And we'll talk to you again soon. Portfolio manager. Thanks. Tocqueville Asset Management. Thanks.